So the markets have been awfully quiet the past 1 week, and there's a pretty good reason for this. It's because we are approaching the end of the month, and we need to kind of deduce where the dollar is headed for from here. My name is Samson Mzera, and welcome to this episode of the Market Watch series, where we talk about the charts, the news, and what to expect in the markets. So make sure to like, subscribe, and stay tuned. The dollar index is somewhat range bound with very muted moves over the past 1 or 2 weeks. We basically retraced feeling that imbalance. And now this is where we need to look at what investors are focusing on. And it seems the focus or the main agenda is shifting from having an attitude or a bias towards looking at inflation to more growth concerns. Now, take a look at how the S&P behaved when that NFP report was released earlier last month. We had that sharp drop, and it basically created concerns of a US recession and talks about the health of the US economy. And this theme is kind of carrying the whole market right now. We did see the recovery in the S&P after that very hectic first half of the month, and basically you're back to July highs. Seems as though inflation is taking a backseat, and now employment numbers are starting to be more important, and anything to do with the health of the US economy. For example, today we have that GDP reading coming out, and this is what investors are focusing on. Yes, we know inflation has come back down, and it's somewhat in control, or it's somewhat in line with what the Fed is expecting. And we do know we're going to have a cut. So it's either going to be a 25 basis point cut or a 50 basis point cut. But the main agenda is how is the health of the US economy doing, and what is the urgency of this cut. So if we are having any data that is going to give us a clue or a look into the US economy, it's going to be pretty vital in determining where the dollar heads from there. So for example, in today's readings, we have the GDP report from the US coming out, and this is going to give us a clue on the health of the US economy and how that is going to translate to the aggressiveness of these cuts that we're expecting. So if you find that the US economy is very healthy, then that 25 basis point cut is going to be a very good sweet spot for the Fed to follow in terms of the rate cut path. But if you find that the health of the US economy or the GDP is lower than expected, then it's going to awaken those concerns of, is the health of the US economy really doing well, or are we seeing deteriorating conditions? And this may provide some urgency to cut even further. So for example, if you have a look at the S&P 500, we've reached that peak where we were on July, and we are sort of moving sideways from there as we wait for this data to come out. So we'll be looking at whether the market structure will change for us to go lower, and that is if we have data that is confirming this. If we have, for example, low GDP readings, and then it's consistent with other data that is coming in that is showing signs of a weakening US economy, then we might see a break of that structure lower, and we might start heading back into the territory we were in probably mid last month. So that is one thing to look at as we head also into next week. However, if things look bright and if things look okay in terms of the US economy, then this might imply us going higher and forming new highs for the S&P 500. So you might see a break out of that resistance zone, and depending on how it goes, for example, it can be a momentum entry or a breakout and a retracement entry. So those are the things that traders will be looking for in the wake of the data that is coming out. On gold, the story has been the same. We've hit new highs. Remember, we went to 2,500 and now we are slightly above 2,500. So things are looking a bit expensive for a lot of guys, and that is why you're seeing that demand for gold a bit muted. However, the weakness in the dollar story is providing it with some support. So we are seeing that, yes, the demand for gold has somewhat reduced, but it's not really falling down because also the dollar is expected to be weak. And that is why we are in that range-bound scenario over there. So we need one of these two factors to come in and drive prices. So we either see increased demand for us to go higher, or significantly lower demand, which is looking a bit unlikely, for prices to go lower. Alternatively, we need to see prospects of a very weak dollar for us to go higher, and the prospects of a very weak dollar imply that we see the probability of the cut being bigger than what you're anticipating. So at the moment you're anticipating 25 basis point. So if you see something like 50 basis point, then that might imply a significantly weaker dollar, and that might lead us to looking for higher highs in gold. So those are the two scenarios that we're looking for at the moment on the metal. Having said that, thank you for tuning in to this session of the Market Watch series. Remember, if you want to trade any of these instruments, the link is in the description. So be sure to get started with HFM, and see you in the next one.